As we turn our attention now over to the grain markets, we're joined this week by Darin Newsom of Darin Newsom Analysis. Is it a deal or no deal? That seems to be the question after Russia and Ukraine signed an agreement to export grain through the Black Sea. But the very next day, Russia attacked a Ukrainian port with missiles. But as we started this week, Ukraine said they'll be loading ships by the end of the week. Well, that's where we began the conversation with Darin discussing that Ukrainian deal. Darin, we appreciate you joining us this week. I don't think you're too surprised by this news that happened over the weekend, are you?
No, not at all. I mean, Bryce, you and I have both been around long enough to know that any deal with Russia is basically, as you put it, is basically no deal. So, I mean, it was interesting. And then, the follow up to that, I received some information from a friend who has, through a mutual connection in Eastern Europe that pointed out Russia was well within its rights to bomb the port of Odessa because of one of the loopholes. There wasn't a ship in transit at that point. So, this is the sort of thing that we're going to be dealing with. It is a deal. It is an agreement. I just don't think it's going to carry much weight.
Well, Darin, as we shift to the news, you and I visiting here on Wednesday afternoon, we had another interest rate hike. Last time you were on the program, we were digesting the one at the time. I believe you said you weren't surprised by that and you thought it was overdue. What's your feeling on this one?
Yeah, same sort of thing. I will say this about this version of the U.S. Federal Reserve is that they do a good job of telegraphing exactly what's going to happen, so that there isn't this huge market shock or anything like that. And we did get the 75 basis point increase. There wasn't a lot of guidance in the immediate comments. We'll see what the minutes have to say later on. But what will be interesting is what happens with markets from here on out. I've been waiting for the investment side to get back into some of these fundamentally bullish commodities, and this could finally be the trigger. We've got the July meeting out of the way. We've got the 75 basis point interest rate hike out of the way, and now we're moving into a time of year where they don't have where investment traders don't have to worry about the August and September soybean contracts. They don't have to worry about September corn. They can move right into November beans and December corn. Play the big markets. So to me, everything seems set up right now for some investment money to come back in, regardless of the 75 basis point hike.
You're starting, Darin, to hit on some of those commodity topics, and let's do so just right here. Beginning with corn, I believe in one of your columns this week, you wrote about demand when it comes to corn. What are you seeing on that front? What do you want our viewers to know?
The demand is still strong. I know there's a lot of talk out there from a lot of people that demand is that we're seeing demand getting blown up at this point, and it's just not happening, at least not yet. Basis is just too strong. We've still got a national average basis index running about 85.5 cents over September, and September is still holding just a slight inverse over the December futures contract. So we've got incredibly strong old crop fundamentals. Tells us demand still strong, and as we look out further, supply is still a problem. We have not solved the supply issue. Weather certainly isn't indicating that the new crop is going to solve the short supply problem. So demand remains strong, and supplies remain tight. It's kind of a recipe for the market to continue to stay supported.
Darin, as you and I visit here at the midweek, soybeans had a nice little run up here. What's your short-term outlook for that crop?
It's very similar to corn, except for soybeans may be pushing record tight available stocks to use situation. One of the things I've done is I've gone back and I've compared, this incredible August September spread. And I usually don't pay any attention to August and September soybeans, but if we look at it here in midweek, it closed at $1.54 inverse. And what it brings to mind is when it happened in 2013. Again, the last time we saw supplies this tight in relation to demand. So we know we have an incredibly tight supply situation, and we know we still have strong demand. And we're starting to get, and the commercial side remains concerned, over this weather for the first half of August. This is supposedly the key month for making the soybean crop. And if it's hot and dry and we don't have any left over, there's no margin for error in 2022. The market certainly seems to be reflecting that.
Darin, I want to make sure we get to a couple of our viewer questions this week. Daryl in southeast Nebraska wrote in, had this question for you. He noted there's been a whole host of issues, particularly for the state of Nebraska, where we're coming to our viewers from today. You talk about wind, hail, drought, depending on where you're at in the state. He asked if these factors are going to impact the overall U.S. production numbers. Your thoughts?
It may not affect USDA's numbers, but those don't matter. The reality of the situation is it does play a role in what we see in the future spreads. I mean, there's very little carry out in that December to July future spread for corn for a reason, and that's because the commercial side's concerned about 2022 production, just as they are with soybeans. And so what we'll also see is the local basis market's also going to reflect that. So will it ever show up in USDA? Who knows? Who cares? The reality is market's going to take notice of it.
We've talked about corn and soybeans thus far. Haven't hit on the wheat market yet. Your thoughts there?
Wheat is as difficult as always. Just before we went on with this, wheat collapsed to double-digit losses. I have no idea why. It's always an interesting market. What we do know is if there is a market sector susceptible or vulnerable to a stronger dollar, which is theoretically what could happen with another interest rate hike, it is the U.S. wheat, because there's wheat worldwide. Yes, there's been supply problems. Obviously the Ukraine-Russia situation, talk of possible problems, weather-related problems in Argentina. Europe just went through a heat wave. So there are issues, but right now we just have not seen that uptick in demand for U.S. wheat. So kind of opens the trap door, lets the market fall through a bit.
Darin, I'm going to ask you your risk management advice here in a moment. Kind of on that topic, though, I have another viewer question here. Shane in central Nebraska wrote to us this week and said he's considering selling some 2023 crop, asking if you have suggestions on perhaps how much he could or should lock in right now.
Yeah, I would like to get some 23, possibly even some 24 locked in, on this seasonal rally that I think we're about to see in both corn and soybeans. Do I think the tops are in? Yes. I think the activity we saw in May and June likely set the long-term tops. That could certainly change based on weather. But for now, if we get a good challenge of those highs that we saw earlier this spring, early summer, then I think we can get some more locked in. Certainly get some 23 on the books, maybe even go out to 24.
Building on that point, final word is yours. What else would you like to leave our viewers with, whether it be risk managed advice or other things you're seeing in these markets?
The number one thing is we really have to watch real fundamentals in here. We have to watch basis. That tells us so much about what's going on. We have to watch future spreads. If you want a good idea about what's really going on, there's your story. The other takeaway from this week is, despite the fact that interest rates were increased, we could still see renewed non-commercial or investment interest in these commodities, and that could certainly make things more interesting over the coming months.
Darin Newsom joining us. Darin, always appreciate your perspective. Thanks for coming back to Market Journal.
Thanks so much for having me on again, Bryce.